Now more than ever, are we all aware of what's kind of going on in the stock market, whether it's AI, Nvidia, quantum computing, Apple, Amazon, or whatever GameStop is up to these days. But let's be honest, investing sounds complicated. But the sooner that you start investing the right way, the more money you will make in the long run. And you hear the terms S&P 500, index funds, dividends, and suddenly you feel like you walked into a calculus 3 class as a first semester freshman. But the truth is that investing is not just for the Wall Street guys in suits with Bluetooth headsets that have a strong caffeine addiction. Investing is for you. Yes, you watching this video maybe have a few $1,000s or less in your bank account, checking account, savings account, whatever. But that's more than enough to get started the right way. So today we're going to go over how to start investing like a pro. We're going to go over how much money you need, what apps to use, what to buy, and what not to buy, because that's where most people screw it up. That's so important. And before we start, I'm not your financial advisor. I'm just some random guy talking through your phone screen or computer screen about investing. So with all that being said, the first myth that we want to debunk is that you need a ton of money to start investing. You do not need thousands and thousands of dollars to get started investing. You can literally get started investing with the cost of a Chipotle bowl. Whether you have $100 or even just $10, you can get started. But the key that I want to emphasize right now is getting started. That's the most important thing, more important than how much you start with or when you start. It's just the sooner you start, the better. You'll make more money over time. And the first rule that we want to put in place when you get started is do not invest money that you are not willing to lose. For example, if you need to make rent by the end of this month, $1,500 or so, do not go and invest that money because you need it to pay rent. You still need to live. Only invest money that if tomorrow it disappeared, I mean, of course, none of us want to lose any money, but if tomorrow it disappeared, your life could still go on because you don't want to put yourself in any tight position. Investing takes time. Sometimes you'll be up, sometimes you'll be down. So you never want to put yourself in a tight position financially. And the next rule that we're going to put in place is a big no to day trading. Never ever start day trading. I mean, it's so enticing because you might see it on Instagram Reels, on TikTok. And if you're not familiar, day trading is basically just the buying and selling of a stock within the same day multiple times. So you might see online people are making crazy huge returns monthly, weekly, daily day trading. But over the course of time, it's been proven that up to 97% of day traders are not profitable and they will lose money. 80% lose it all. So public service announcement. Number two rule, I guess, no day trading here. We are strictly investing for our long-term wealth and benefit. So now that we got our two rules out of the way, the first thing that we need to do to start actually investing is open a brokerage account. Now, what is a brokerage account? Well, think of it like an investing gateway or portal. It's where you actually do the buying and selling of stocks that you want to invest in. Nowadays, there are apps. Maybe you've heard of Robinhood, like everybody else. We've all heard of Robinhood these days, or Charles Schwab, Webull, Fidelity. There's a lot. So just pick one that is credible, sign up, and link your bank. Boom. You're in the stock market now. You're literally a finance bro on Wall Street with the tie and everything. But quick pro tip is that a lot of these will actually give you a free stock if you sign up using someone else's link. So I'll link mine in the description if you want to use it for Robinhood. But you don't need to use mine. You could use one of your friends if they already have one, and you can each get a free stock. So once you have your free stock, you need to deposit some cash, that cold, hard green you worked so hard for. Now remember, it doesn't need to be a lot that you put into your account. It can literally be $10, but a good rule of thumb that exists out there, which of course is not a financial advice thing, but 5 to 10% of whatever income that you make. And if that 5 to 10% is expendable income, then that's probably a good place to start. Maybe you invest that much per month. So let's say you invest $100 a month. You just opened up your account. That's good enough to get skin in the game. But here's where most people mess up is that they dump money into their brokerage account and then they buy whatever's trending. Once it starts going down a little, they panic sell the next week and all of a sudden they lost money and they give up on investing. We're not day trading here. We're going to be investing. So now that you got money into your brokerage account, we can move on to the meat and bones of actually investing in your account. So this is where it gets interesting because everyone wants to know, what stock do I buy? You hear all the time, had you invested $10,000 into Apple or Microsoft 30 years ago, today, you'd be a multi-millionaire on private yachts and yada, yada, yada. Well, although that's true, technically, right, when you add up the percentages, statistically, that's not going to happen. Like, don't think about that. It's, I mean, you're better off buying a lottery ticket. And not to say that they're the same odds, but it's just like a dream. Instead, what we're going to focus on is building our wealth little by little. We're going to move on to index funds slash ETFs, which historically average about 8 to 10%, more specifically, the S&P 500. So if on your brokerage account, you type in SPY, and then you search up, it'll come up with like a stock. So on that stock, that's where you want to put your money into. You want to buy shares of that. You hit buy on that with your $100 a month. Or you can also look for other ETFs such as VOO. Now, statistically, historically, these have produced about 8 to 10% returns every year. Some years, though, they return 30%. Other years, they return -5. But over the long term, you will, historically, anything can happen, but you'll see about 8 to 10% growth. And if you want to get fancy later on, you might hear about tech ETFs such as QQQ, but that'll be later on down the line whenever you're more invested into investing. But the next thing that we're going to talk about doing is the hardest thing to do, and that is doing nothing. Because now that we got our set schedule of every month, your $100 you set aside, you buy SPY or VOO or anything else that you wanted to buy, you stick to that schedule, and that's it. It doesn't matter if SPY goes down 10% the last month or year. You just keep doing it because statistically, over the course of the long run, you will make more money than someone actively buying and selling and buying and selling and getting into one stock, getting into call options. You'll make more money just by sticking to this plan. So doing absolutely nothing is the best thing you can do. And that is so hard. I tell you, it's so hard. And I'll be honest, I have strayed away from that. And then I'm like, I would have just made more money if I would have just done this. So I started doing just this and now make more money. Now, big mistakes that we need to avoid when doing all this is number one, buying what's hyped, what's going around Twitter and TikTok. You don't want to just buy into that because people are talking about it. You just want to stick to your guns, and that's going to be so hard. Like right now, you're hearing me, and later on, you're going to remember this. Whenever you so badly want to buy some stock that people are talking about, and then you're like, okay, I'm going to stick to my guns. And then the next day, you see that it's up 20%. You're like, if I would have bought it. But you're like, no, I'm going to stick to my guns. So then the next day, it's up another 30%. And you're like, oh, okay, I'm just going to buy it. And you buy it, and then the next day is down 50%. That's what happens. It's called trader psychology. It's an actual phenomenon that exists in the market. So we are going to bypass that and conquer it by just doing nothing there, avoiding that mistake. Now, the other one is timing the market. There's a saying, I know it might be so cliche, but time in the market beats timing the market. So basically, it's what we talked about already. The longer you consistently put in your $100 a month invested into SPY will be you actually being like, okay, I'm going to wait for a crash so then I can buy in and then ride it all the way back up. Yeah, that's so unlikely. So unlikely. Time in the market will always win. Now, also ignoring fees. There's a lot of fees that some brokerage accounts, some brokerage platforms like to throw in without you even knowing. They're like sneaky. So you need to be actively checking like what you're getting charged for, because those will eat into your profits over time. Another one is not diversifying. The recommendations I gave as a not financial advisor is buying SPYBOO because they're diversified among the 500 biggest companies in the US. Now, if you were to put all your eggs in one basket into, let's say, just NVIDIA, and then next month NVIDIA happens to have really bad news and then it goes down, well, then all your eggs were in that one basket that just went down. And the last mistake to avoid is selling too soon. The people that have made the most money in the stock market are people that haven't even sold yet. So the truth is, starting to invest is really easy, actually. It's so simple. Even now, with everything that we have, all these platforms, Robinhood, Fidelity on the apps, it's so easy. Anyone can do it. But from the greatest investor, Warren Buffett, to anyone else that you might see, they all started like you. They just got started one day investing with not that much money, and now it's a lot of money. So you can do that too. You just need to stay consistent. You need to keep at it and let compound interest do all the heavy lifting for you. And who knows, here in 30 years, you might think to yourself, the best money you ever spent was the money you never spent and you invested instead. And even greater than all this is that Jesus Christ died for us on the cross 2,000 years ago, gave his life for me and you. If you haven't heard about him, a quick Google search will bless your life. So thank you guys for watching this video. And if you enjoyed this video, maybe you are a beginner investor, I have other videos on my channel that talk about finance, and you can maybe learn a lot from it or give me feedback on them. Let me know what you think, what you want to see next. Thank you guys for watching. Please hit that subscribe button, and I'll see you guys in the next videos. Bye bye.